think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, be sure to go check out powermetalresources.com. The link is in the description below. Power Metals focuses on multiple different commodities such as gold, silver, uranium, and many others. And so be sure to check that out as we are in a commodities bull market. You don't want to miss an opportunity to get exposure to many different commodities that are going to perform well over the foreseeable future. So be sure to click the link in the description below to check out Power Metal Resources. They are located on the London Stock Exchange as well as the OTC market. So link in the description below. Thank you, and back to the interview. Hey everyone, welcome back to the show. Rick, glad to have you back.
Daryl, pleasure to be back. Nice to visit with your audience through you as the medium. I appreciate you having me back.
Yes. A lot has changed. A lot has changed in the last couple of months since you've been on. We've had a red sweep election, and some feelings are hurt, and some people are happy, and people still seem to be trusting in government to fix the problem. So but I think markets are rallying. Markets are risk off. Risk off investments have been just going kind of parabolic. What's your view on what's happening there?
I think in the very near term, the Trump election was good for Wall Street and good for the dollar. Money's flowing from around the world into the United States. It reminds me of something we said on your show earlier, which is to say the U.S. dollar is the worst currency in the world, with the sole exception of all of the others. And I think Wall Street likes the prospects for the economy under Trump, in the sense that perhaps not de facto, but perhaps not de jure or by law, but de facto regulation in a lot of industries, I think, will be reduced. The unstated policy is an example of the Biden administration not to permit any more liquefied natural gas plants. It wasn't written into law. They just stalled everything. And the threat that hung over Wall Street of the elimination of the carried interest provision for money managers. I think all of those things have combined to make at least Wall Street in the near term much more confident, and has caused a flood of foreign investment into the U.S. Whether or not that continues is, of course, a different circumstance. I don't believe that either candidate would have dealt with or will deal with the explosion of government costs or the debt, despite Mr. Trump's decision to appoint several very, very, very large subsidy takers to manage something called the Department of Government Efficiency. How's that going to work out? I'm sure Musk is going to be front and center to remove the subsidy on electric vehicles, or to reduce the implicit subsidy by NASA to SpaceX, right away. But anyway, I'm glad that there's a certain group of people who feel good about things. And by the way, as you know, Daryl, I was no supporter of Harris or Trump. And I hope that the removal of some of the more deleterious aspects of regulation will affect some form of lasting and positive change. I would only point out to people that all the election promises that Trump made cost money. Just like all the promises that Harris made would have cost money had she been elected. I'm old enough, Daryl, to remember a much more sweeping mandate that occurred in 1980 when Ronald Reagan was elected president by a much larger majority. And the promise was that he would reduce the size of government. There was a wonderful book written about the aftermath of that. It was called The Triumph of Politics, by David Stockman, still a friend of mine. And Stockman details in the book, excruciatingly, unfortunately, about how the Reagan revolution for smaller government was derailed by government within 90 to 120 days of Reagan taking office. And I believe in this case past his prologue. I don't believe government spending will go down. I believe there will be some tax cuts, which means that the deficit will go up and the debt will go up. And perhaps not me because I'm 71, but certainly you are going to have to deal with this in the future. And I'll tell you something, if you don't look after yourself, like right now, it's not going to feel good when the bill comes due for all this.
Yeah. Yeah, definitely. So government efficiency, right? I had someone on my social media. Sometimes I get into these little debates. They didn't even want to entertain my comment, but he had mentioned the Department of Government Efficiency, and he
Yeah.
mentioned some of the wasteful government spending. I think it was testing on lab rats and some stuff, something with Fauci or something, and they were like peanuts to an elephant. Like they were like, oh, 70 million here or 2 million here, and in these examples he was using. And I said, hey, the biggest government expenses are, Social Security, Medicare, military, and interest. Like
Right.
like talking about cutting if you're talking about making the government more efficient, like those are the four elephants in the room, right? I
You know,
mean,
I don't even get in discussions like that anymore because they involve people's preferences and everybody has their own narrative and they're welcome to their narrative. I think it's lovely. What I try and do is I say, okay, that's great. I agree with you. Now let's do the math. Okay, let's do the math. The Internal Revenue Service says that the private net worth of Americans, that is, assets the government doesn't own, $141 trillion. Since I don't have a better number, let's use that. That's the government's own number. The government confesses to having $36 trillion in on balance sheet liabilities, $29 trillion net of their own balance sheet, which is to say their obligations that they own themselves. But on top of that, the government suggests that the net present value of unfunded entitlement liabilities, Medicare, Medicaid, Social Security, federal pensions, military pensions, is $100 trillion. So at the federal level, not the local level, not the individual level, not the corporate level, not the state level, we owe $129 trillion and we have a net worth of $141 trillion. That doesn't look so good going forward, but it gets worse. The on balance sheet number, this is just math, right? Not arithmetic. I don't care what somebody thinks is waste or fraud right now. I'm just talking about the math, okay? The on balance sheet deficit, government spending, adds about $2.5 trillion a year. And the accretion, that's to say the addition, to the unfunded entitlement liabilities adds another $2 to $2.5 trillion a year, which means that we're going $5 trillion a year deeper into debt. To make the magnitude of that more understandable, when the big thinkers say, "Oh, well, tax the billionaire or the billionaires, right? The billionaires, tax the billionaires." The government says that the aggregate net worth of American billionaires is $5.6 trillion, which is to say, if you didn't increase their taxes, but you rather than that, you stole everything they had, every goddamn dime, you eliminate the deficit, not total spending, just the deficit for 1 year. And you don't touch the debt. Now, interestingly, total government revenues, before any expenditures are less than $5 trillion a year. We actually add to the debt and the off-balance sheet liabilities by a sum that is almost equal to aggregate total federal revenues. So what I try to do, Daryl, in the situation that you were just in is say, you know what? Let's assume I agree with you just for fun. Let's assume that everything you said is true. And let's assume, too, that the way that you would like to spend the money is the correct way to spend the money. Do you understand that there's no money? And, then you get what's called the yes, but objection. The yes, but objection means that they can't refute your arguments, but your arguments are inconvenient for them. So, but. And so when I hear the yes, but, I say, no, 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 we've already agreed on that. Already. I said, what you said is doubtless true, particularly from your point of view, but it doesn't matter. If you go into a store and you make a choice between a loaf of bread and a case of beer, the choice doesn't matter if you don't have any money.
We broke. We broke, y'all. We beyond broke. We delinquent. And
Yeah, the other thing that gets me is you hear some of these big thinkers, these government guys, say, well, it doesn't matter because we owe it to ourselves. That's not true. The spenders owe it to the savers. We don't owe it to ourselves. We're not one and the same. And some of those savers aren't very forgiving, but most importantly, when the politicians say we owe it to ourselves, they're talking about the bondholders. The bigger debt that we have, the unfunded liabilities, are promises that we've made to people who hope to receive Social Security or Medicare or Medicaid or military pensions. I don't think those people would be very forgiving. Let's say that you'd served our country, Daryl, I don't know if you have or not, in the military, and you did it with the view that, after your 20 years of service, that you'd come out and they'd take care of you in some fashion, not a great fashion, but they take care of you for the rest of the time. Now they send you a letter saying, too bad, so sad, no money, strong letter to follow. How are you going to feel about that?
yeah, I've been actually researching that too with these defaults on pensions and everything. It's terrible. So like the dollar's been had a bump up rallying. What's your outlook on the dollar moving forward? I know usually when a dollar moves up, that means that people are trying to mitigate risk or whatnot. I mean, because so what we
Well,
did.
what's the dollar moved up against? It's
Uh,
moved up against other phony currencies. Uh, our mutual friend Doug Casey said the dollar is the worst currency in the world, with the sole exception of all the other ones. And I think that's what's happening. For a little while, gold went down against the dollar. That's understandable too. The strength in gold really has been foreign central bank buying until 8 months ago. About 8 months ago, individuals measured by flows of funds into gold ETFs increased. And I think that the Trump election caused retail selling of gold in the last 3 or 4 weeks, since the Trump election. But the central banks have continued buying. And I suspect that net inflows from retail will be at least even next week, which is to say, even the retail disintermediation of gold, disintermediation being a fancy way of saying selling gold and buying treasuries, is over. So while the US dollar would seem to be doing well against things like the Canadian dollar or the euro or the yen, the US dollar is not doing too well against things like health insurance or auto insurance or food or mortgage prices or gasoline or gold. And that's what I think your listeners have to pay attention to, Daryl.
hmm so people, I mean, to each his own, right? But people are selling gold, and Trump is promising to do some good, right? He may do something, right? But he ain't even in office yet, right? And it's only for
Right.
4 years, right? And so it's like why would you? I don't understand, like why. Not saying that everyone that sold gold is American, but like I didn't sell any gold, right?
Right.
Because it's like yeah, this is only a 4 year thing, right? And then 2 years from now, you can get the Democratic Congress or whatnot, And so it's like I'm not finna bet my security or my life stability on this candidate being able to turn around, because like we can't turn around any of like the national debt and everything. Like I feel like that's just baked in the cake, And so yeah. I don't understand why
Uh,
someone would sell gold.
the arithmetic we just did is baked in the cake. This isn't me making this up. The numbers I gave you were from the Internal Revenue Service and the Congressional Budget Office, not from some fat, cranky old libertarian. How do you reduce the debt if you dig the hole deeper? Yeah, it just these are simple facts, and I'm not trying to say that your listeners should go hide in the corner and roll up in fetal condition and whimper stuff like that. All I'm trying to say is that they need to plan for the way that they live changing. Now, what I think is going to happen, Daryl, is what happened in the decade of the 1970s. We came into the 1970s with marginal tax rates very high and persistently high levels of federal spending and federal deficits. And it wasn't politically feasible either to reduce spending or to raise taxes. So what happened was that they did neither, but inflation took away the net present value of the obligations, which is to say, somebody who was supposed to get $800 a month in Social Security got it, but that $800 in Social Security bought $200 worth of goods and services. By the government's own reckoning, the purchasing power of the dollar over the decade 1970 to 1980 fell by 75%. Not coincidentally, the gold price went from $35 to $850. My suspicion is that some fat old cranky bald guy named Rick Rule will still get the Social Security that they promised me. I don't know what it is, $4,000 a month, something like that. And my $4,000 a month will buy me what $600 or $700 a month buys me now. The people who are planning their life for the next 10 years, believing that the level of benefits that they have been promised will buy them the same lifestyle that they enjoy today, are in for a very, very rude shock. And they need to make other plans. If they need to, they need to save more. They need to earn more. They need to do something because we have a whole generation of Americans who seem to believe that the tooth fairy, in the form of the federal government, is going to kiss all their problems and make them better. They say, well, we can't cut Social Security. I paid into Social Security. I'm due my benefits. So what? So what if that's what you believe? You paid into something, and the money that you paid in was invested in low yielding government IOUs, and they spent the money. It was used to fund current account deficits going all the way back to the days of FDR. The fact that you've been promised it and the fact that you want it and the fact that you deserve it are interesting, but they're not relevant. And I think it's incumbent on people who think that there is some reason why they are going to enjoy the level of benefits in the future that they think they're entitled to need to really examine that premise, Daryl. I think it's critical. Even people, well, especially people your age, they're gonna be able to pretend. I'm 71 years old. They're gonna be able to pretend for most of the time I have left on Earth. And I've made other plans anyway. So even if even if were they to go where I would like to see them go, I'll be fine. But there's a lot of folks who haven't been as lucky as I, and who are younger than I, who believe in Medicare and Medicaid and Social Security, who served our country and believe that their pension is going to afford them the same lifestyle that they would enjoy if their pension was paying them in current dollars today. And those people need to make other plans.
Yeah, yeah, that's pretty grim, but it's the truth, right? So, so when so thinking about Rick Rule, you've gotten lucky, or you've done your due diligence to invest, save, and all of those things. So, for in the near term, what are some assets that you think are going to really perform well? So we've talked a lot about uranium. Nat gas has been one that's been continuously coming up, and so I'd love to get your take there.
Yep. Nat gas is cheap. I'm not trying to say it's not going to stay cheap for a year and a half, but it's not going to stay as cheap as it is for 5 years. And nobody gives a damn right now, which is wonderful. Uh, there's really two arbitrages there. The first is the difference in the energy equivalent price between natural gas and oil, which is to say that oil on an energy equivalent basis sells for twice as much as natural gas. That's partially justified because it's a better motor fuel. The other arbitrage is the arbitrage between the price of natural gas in North America and the price of that same gas in Shanghai or Tokyo or Rotterdam. Right now, Henry Hub gas in the U.S. South, the reference price for domestic natural gas, something like what, $2.50 a thousand. It's winter, so the price is up a little bit. Price for that same gas in Rotterdam is $8, and it costs between $1.50 and $2 to get it there. So there's sort of a 50% margin on a commodity that's already 50% undervalued relative to oil. Now that can go on for a while, but it can't go on forever. And the market is acting like this dual arbitrage is here forever. There's various things that could go wrong with the thesis. Peace could break out in the Middle East. Stranger things have happened. I hope it does. And peace could break out between Russia and the Ukraine, which would reintroduce Russian natural gas into the European market. But that just postpones the inevitable. So certainly oil and gas, in particular North American oil and gas, are cheap. And investors with a 5-year horizon, particularly investors who enjoy dividends, who want to have their cake and eat it too, need to look at oil and gas investments. The second thing is anybody who doesn't own gold, I honestly believe is making a serious mistake.
So really quick before we get to gold.
Yep.
So I've been so in addition to natural gas, I'd love to get your take on oil field services and offshore oil production.
I'm not as good at oil field services as I am at oil and gas. They're operating businesses. I need to say a really good friend of mine, a really smart guy named Daryl Malpin, maybe the best individual money manager I know, is just loading up on the oil field service companies now. He says they're a leveraged way to play a leveraged business and deeply out of favor. So I'll leave that to him. He's particularly interested in the offshore drillers. He's interested in them because that part of the oil industry, which is more in favor than others, are onshore shale drillers. And there's been a de-emphasis on offshore. And we see now that, at least with regards to current technology and the current cost of capital, we have a fairly short remaining runway in the United States for grade A onshore development locations. And we also have at least 3 developing offshore plays: the offshore subsalt in Brazil, the Guiana Shield off the northern coast of South America, and offshore Namibia. And the industry has gone from being well oversupplied with high quality offshore drill ships to being undersupplied. That's really good for price, particularly if you believe, as I believe, that the emphasis will, over the next 10 years, shift from US and Canadian onshore shale to other markets and offshore plays. So I'm attracted to the sector, but I don't have any names to give you because I don't specialize in that.
Got it. Yeah. I just wanted to get your, just outlook or anything that you've heard. So you were going into gold.
Yeah, if you agree with the thesis that I posited at the beginning of this discussion, which is to say that the fact that we're $130 trillion in debt with no means of getting out of it, and that the likely political answer will be to reduce the purchasing power of the US dollar, we have a historical example of what happens then. In the decade of the 1970s, as I said, the purchasing power of the dollar fell by 75%. And the gold price went from $35 to $850. Now, let's assume that the price moved from 35 to 100 happened as a consequence of taking off the price caps and the restrictions on U.S. gold ownership. Still, if you give up the move from 35 to 100, a $65 move, we had a move in the rest of the decade from 100 to 850, an eightfold move in 10 years, corresponding with a decline in the purchasing power of the US dollar by 75%. If I'm right that the only way out of the net present value debt trap that we face is by inflating away the net present value of the entitlement obligations, it is most likely that the simplest way to insure yourself against that is to own an asset class that's defended you against that for 1,000 years, which is gold. The great thing about gold, Daryl, is that you get a lot of insurance without too much premium. In the example that we just gave, if you had in 1970 had 10% of your net worth in gold, that 10% of your net worth would have gone up eightfold, which is to say, if you had equities as 50% of your portfolio and they fell by half, you'd be okay. You'd be up 80 and down 25. You'd be net ahead. It is imprudent to have 100% of your net worth in gold. It's also imprudent to have less than 5% of your net worth in gold.
Mm-hmm. Yeah. So the miners, right? I mean, royalty and streamers. I had a talk with Benjamin recently, and we talked about the royalty and streaming companies doing well. The miners, I've honestly, I think they're very unloved. They're very, yeah. I'm trying not to lose interest there, but what are you thinking in terms of the miners? What's the
Most of
disconnect
them,
here?
of course, if we've talked about before, deserve to be unloved. Most of them, despite the fact that they're in an activity that we think is a good activity, don't do it very well. So I think from the point of view of your listeners, depending on how much risk they're willing to take, and particularly how much work they're willing to do, the best thing that they can do is own the highest and best quality companies. Ironically, in a gold bull market, those guys underperform the rest of the market a little bit, but they do so with a lot less risk. If you assume, as I assume, that the GDX, the ETF representing the biggest gold miners, if you assume that in a gold bull market, that the beta move, the extent to which the gold stocks outperform the broad markets, is 300%, it might be that owning the best of the best stocks actually costs you a little money, that you only get a 275% move as opposed to a 300% move. But you give away that 15% of upside performance by eliminating most of your downside risk. And I'm okay with that trade, Daryl. You know, you can take away a little of my upside if you take away most of my downside, particularly if my upside is big enough that I can afford to have some taken away. Coming down the quality trail, if you're willing to do the work, if you're willing to identify, as an example, the very low cost, long lived single asset producers, which generally trade at a discount because single asset producers are believed to be riskier, which they are. And you can identify ones that either have to go up in price or will be taken over by a bigger company. Then you can, in fact, outcompete the broad market, but you have to do the work. If you're willing to do more work and come down into the junior space, you take a lot more risk. That's a circumstance where you're hunting for 10 baggers, but you're willing to take much greater risks both of volatility and also risks of mistakes. So I would ask your listeners to start by simply owning gold for insurance and move on from there to owning Franco-Nevada, Wheaton Precious, Agnico Eagle. And then, after you've accomplished those two goals, begin to get gamier with the gold stocks. If you're going to do that, I would humbly suggest that you go to the real classroom, We have a couple hundred hours of instructional material as to how you separate, in movie parlance, the good from the bad from the ugly. And if you're not prepared to do the work, do not play the game.
Yeah, yeah, for sure. So, in anything coming up in the rural classroom? I know you do the boot camps.
Yeah, I feel strongly enough about gold, and so do our listeners, by the way, that the next boot camp we do is going to be the fundamentals of gold. We're going to do 8 hours as a real introduction to gold. What has been its historical role? How do you access physical gold investments? How do you separate the physical gold investments from the ETFs and the trusts? How, if you're willing to take the risk, do you buy gold stocks? Uh, we're going to really examine the gold market in detail. Now, Daryl, you've taken a couple of our boot camps. These are not for tourists. Don't show up if you aren't prepared to do the work. Because if you aren't really interested, this is going to be deeply boring and very hard. You're going to have to apply yourself to some pretty dry stuff for 8 hours. And then to really get it, you're going to have to replay the tapes a couple times. So you have to be prepared to commit 25 or 30 hours to this. And if you don't care enough about it to commit 25 or 30 hours, why would you pay me to attend a course if it isn't going to benefit you? I know it's a perverse sales pitch, but if you aren't really prepared to do the work, don't come. Don't buy the course. I have an absolute money back guarantee. I'm not eager to refund people money. But if they don't feel like they got their money's worth, I don't want to take their money. So the financial risk is all mine. But don't sacrifice 8 hours of your life to something that is neither useful nor pleasant to you. Show up only if you are interested in gold's role in your family's financial future.
Hmm. Yeah, I had read the book "The Power of Gold," and that was pretty enlightening from the historical perspective, and it helped solidify me in my views about gold and such. And so, is that kind of like some elements when you talk about like the history?
Yeah, that'll be half an hour of it. Gold's historic role is very, very interesting. Uh, J.P. Morgan is alleged to have said, "Gold is money, everything else is credit," and that's a really important distinction. A dollar is really a credit instrument. It's an IOU. Some would say, like Doug Casey, an IOU nothing. Gold is a medium of exchange. It's been used for countless years as money, but it's a medium of exchange that isn't a promise to pay. It's payment itself. It's a medium of exchange and a store of value. And that simple concept is one that is probably not understood by more than 1 in 100 people. And so we're going to talk about the historic concepts around gold. We're going to talk about gold's real utility in jewelry, in religious iconography, and as a medium of exchange. But then we're going to get much deeper into detail about what aspects of gold ownership and gold investment are suitable for what people and how to do it. It's interesting, Daryl, when I started studying gold, which was in the late 60s, when I was in high school, I was fascinated to learn that gold was a store of value and a medium of exchange for people in Mexico and Peru and what is now Zimbabwe and in the Middle East and in India and in China and in Europe 6,000 years ago. It wasn't like a reliance on gold was superimposed by one culture on others. The utilization of gold as a medium of exchange and a store of value was something that occurred simultaneously among many cultures. And it formed the basis of early trade between cultures. There was not a lot of social trust, as an example, between the Christian Crusaders and the Muslim Middle East. They didn't trust each other for credit instruments, and so they had to either kill each other, which they did, or buy and sell each other's goods and services for gold, which they also did. And now we see a situation on a global basis where increasingly countries that don't trust the United States, Russia as an example, from whom we stole $300 billion in US treasuries, are building up their gold reserves, countries around the world, precisely because they don't trust each other, precisely because gold is a medium of exchange that doesn't require trust. It's not a credit instrument, it's payment. So it's interesting that in 2024, we return to the same instrument that we used in 3500 BC.
Hmm. Yeah. Yeah, for sure. Do you have a favorite memory of like gold? I mean, obviously investing in gold or anything, but like in all your travels.
Yeah, I really truly do. It's funny you say that. I was way, way, way upstream in the Caroni River in Venezuela, in Bolivar province, Venezuela, way back in the middle of nowhere. And we happened on a group of artisanal miners uh, who were literally naked. They had no clothes, they had no shoes, uh, working, extracting gold. And they were so far back in the woods, they didn't even speak Spanish. They spoke some indigenous language, to where they were. And one of our group wanted to buy a little gold from them. And mercifully, we had a Korani speaking guide who talked to them. And these guys knew the London quote. These guys, way back in the woods, knew the London quote for gold. And we learned through the interpreter that they didn't have access to US dollars or Venezuelan pesos or Brazilian currency. We were right on the border between Venezuela and Brazil. But there was enough of a market way back in the woods where they were in little encampments that they could buy everything they needed: diesel, shortwave radios, food, all of it for gold. That's probably. I mean, I've had a lot of great memories around gold. I remember too going to the gold souk in Dubai, which is a great big market where they sold gold, very high quality gold jewelry, like high carat gold jewelry, and where in particular guest workers, Indians, Pakistanis, Bengalis, Sri Lankans, would go every 2 weeks to exchange their wages for gold. And it's a wonderful, wonderful place. There's so much gold in these shops that there's a sort of a yellow hue over the whole area. It turns out there's very good security too. I asked one of the shopkeepers, whether he felt insecure. And I remember he looked at me and he smiled and he said, "The security here is much better than you might imagine." And so that's certainly a wonderful memory, particularly watching the visceral instincts of thousands of guest workers from the Middle East who exchanged as quickly as they could that portion of their paycheck which constituted their savings for gold.
Hmm. Yeah, and it's interesting how like you may like we get products here in the United States and we can go somewhere and get them cheaper whether you're staying in a hotel somewhere on a vacation and such, but like gold is like relatively like the same price like price measured in dollars around the world,
It's
right?
interesting, Daryl. I suspect fairly close to where you are now, somewhere in Seattle, you will be able to find a pawn shop or a jeweler, and he will be paying people 65% of the value of their gold. And these people are so ignorant or so desirous of the cash that they will sell him $2,700 worth of gold for $1,900. Now, people that have no formal schooling up the Caroni River on the border between Venezuela and Brazil are not so uneducated. They know exactly what their gold is worth.
Wow. Yeah, that's true. Well, when is this boot camp coming out? When
I
are you
don't
thinking?
I don't remember, to be honest with you, but we'll forward you a link. It's in early January.
Okay. All right, you all will be on the lookout for that. I think this is going to be a great opportunity, learning experience for many people, where you can dive deep into the history and gold's role in our role in money and in societies and such. And so I'm looking forward to that. Rick, what else are you up to? Anything else people can? I know you're great in a lot of portfolios, right? Are you still doing?
I am. Yeah. I need to say, well, let me give you the pitch first. If you like what I have to say about natural resources and natural resource investing, and you want to take advantage of my 50 years of experience, I'll let you do it for free. Go to my website, Rule Investment Media, list your natural resource stocks, and I'll personally rank them. No obligation, no charge. I rank them 1 to 10, 1 being best, 10 being worst. And if I think my comments have value, I'll comment on your individual issues. That's a pretty good deal. It's free and it's worth something. The second thing is, if any of your listeners are unhappy with their current bank, and I suspect that's all of your listeners, we have a bank that's about to open called Battle Bank. We think it's going to be a better bank, just like our last bank, EverBank, was. We will do things like pay you interest on your checking account, which most banks don't do. We'll allow you to buy certificates of deposit in 20 currencies, not just the US dollar. We'll allow you to control your IRA. Most banks, your IRA is a repository for their products. Their annuities, their mutual funds, whatever. With our IRA, you can own a duplex or a triplex. You could buy a franchise, a business that you operate, whatever. Your IRA is just that, your IRA. And finally, if you own physical gold or silver, we'll establish a margin account for you, secured by your gold and silver. So if you have an intermediate use for the cash where you need the money now, but you don't want to sell your gold or silver, we'll make you a loan against it. We'll give you the liquidity that you have tied up in the gold and silver without you having to sell the gold and silver. That's battlebank.com. Or if you care about the bank and your Rule Investment Media, getting your portfolio graded, in the question and comment section, simply write in bank.
All right. You all heard it. Be sure to go check that out, and I will link to it in the description below. Thank you, Rick, for coming on again, and looking forward to catching up in the new year as many things are going to be changing.
I look forward to it too, Daryl. I hope I didn't scare some of your listeners too much. Remember, you got to do something about this. Just don't lie in the corner and be scared. Understand that you got to take control of your financial future. Government's not going to do it for you. They're going to do it to you. You're not going to be protected by them. You need to be protected from them. And you do that by protecting yourself. That's, it's important that people don't get depressed by this. They just get warned by it and they do something about it.
Yep. So don't get petrified. Get into action. So thank you, Rick, for coming on, and look forward to having you back. Take care.
Pleasure, sir. Thank you.
All right.